Hello everyone, how's everyone doing? It's currently Saturday, May 10th, 2025. I did not upload the Friday and Thursday price reviews. That's mainly because I had a AP exam on Friday, so I was too busy studying. I did not have time to upload the price reviews because these take me a while. But now that that's over, yeah, I'm still a student in high school, by the way, just graduated. Now that it's over, we can go back to creating our day reviews on a daily basis without having too many factors slowing down the production. Today, we're going to be reviewing May 8 and May 9 in one video, since I feel like both of them had the same kind of objective reached and objective moved from. And we'll get into that as we move on with the slides. But as always, information should not be considered as an offer or enticement to buy, sell, or trade. Here is the daily E-mini Nasdaq futures chart, June 2025 contract. This candle here is the May 8 Thursday candle. This candle here is the Friday May 9 candle. Notice we have this new day opening gap drawn on, as well as the consequent encroachment of this premium candle's wick right there. And these arrays here were not used on Friday, but they were dabbled into during Thursday's intraday trading. Now, the ways that these arrays can be used is even if they are not closed through, what tends to happen is that if there's an array that, let's say we have a bearish array. Let's take, for example, this SIBI here. Once price is within that, we can start to shape if we're going to inverse it or respect it based on how we treat the consequent encroachment, low or high of that level. If we try to use the low as support to bring us towards the consequent encroachment, that means obviously we're going to be delivering towards the consequent encroachment. If we shoot to the consequent encroachment and start using it back as support, that means we're going to reach the high. If we reach the high and then use the high level again as support when we're back above it, that means we're obviously going to be reaching for the buy side liquidity. In other cases where we have price move into the gap and then start to use the consequent encroachment as resistance, move beneath the low and then start to use the low as resistance, that's a way that we can tell that eventually we're going to be respecting this array and we're going to be delivering towards more discounted arrays. And that's how we were able to use this daily consequent encroachment wick here and the new day opening gap to help shape price in this day. So a really quick overview before we move into the lower time frame charts. Notice Thursday opened up with a small opening gap that brought us beneath the closing of Wednesday. From there, during overnight and pre-market, price moved up a lot, bringing us a midnight open that was a very premium, which it enables us technically to have more ways to move into a trade when it's obviously very premium. And I did take 2 trades on Thursday and I lost them both. And that's okay. I'm not expecting 100% perfection, even though the ideas are right and the foundation is correct. Sometimes you need to have enough humility to understand that you will not get everything right. And 1 or 2 bad trades does not make you a bad trader. Do not ignore all of your good doings in the case where you have one wrongdoing, where it kind of blinds you from seeing how good you really are at something. The same way that if your mom or dad yells at you once or scolds you once, does not mean that they hate you. And the same way that if an enemy or a person that you are not on the best terms with, if they show you care or respect or say for example, loyalty once, does not mean that that is their character forever. It is proven through consistency. It is proven through a track record. It's proven through multiple multiple occurrences of the situation that would gather enough evidence that would help you understand who you really are. So the only thing that bothered me a little bit was that I was looking towards the trade that I took generally all week. And we're not going to be going over through the trade, but because obviously that's person's things. Um, but I'm not too bothered about it. I was just bothered because this is the trade that I was looking for all week, and the rest of the week during this day and this day is not able to trade because of my rules. I do not trade on FOMC days. I do not trade on the days previous to FOMC days if they do not have red folder news. And this Monday here, I did have red folder news, but I missed it because of personal events. Anyway, back to the price action. Notice how price gaps lower, we trade higher, overlap the wick here. We reach all the way higher into the consequent encroachment of this balanced price range, take out this high, almost move into the daily volume imbalance, but just fall short of it, and then we close lower. The next day opens, trades lower, goes back up, closes at 20,146.5. We also did have the wick that reached into its previous wick and also back into the consequent balanced price range, but we will get into that with lower time frames. So moving into the hourly chart, I have the same arrays that we had on the higher time frame still drawn on, and I also added this sell side liquidity level. I added the midnight open of Thursday, and I also added the consequent encroachment of this book here. Now, if you've noticed, I've used the replay feature on TradingView to remove the price action that's from 4 p.m. close of this day towards where we are now. So what you're seeing right now from midnight open towards this level here, or this candle here, is only Thursday's price action. I just did that so it would be less messy and you'd have your attention more focused on Thursday's price action, and then from there we can move on to Friday's price action following the analysis that we're going to make on the lower time frame on this. So the way that I kind of want to move with this is that first Thursday, and then the Thursday anatomy, and then Thursday minutes, the minute charts, and then after that we'll do the Friday anatomy and then Friday minute chart. So really quickly, we see that midnight open around 20,104.75. We set this aside liquidity level, and then we started to trade hard. 9 a.m. open is around this candle here, and on this day, when I opened the charts at around 7 a.m., which was around this candle, and I saw that price was moving into the consequent encroachment of this balanced price range, I wanted to see price take this sell side liquidity and then use the run on that sell side liquidity as a run, as a manipulation point for it to return higher and reach into this daily volume imbalance. Now, obviously, that happened a little more differently, and it was the main reason that I lost the two trades. What happened was we went beneath the sell side liquidity. We continued to trade through it following 9 a.m. manipulation. 9 a.m. open, 9:30 open, sorry, brought us lower. And then we also had 10 a.m. red folder news, which was President Trump speaks. Now, this was not highlighted at the beginning of the week. This kind of came in the middle of the day. And It was a mistake on my point for not paying attention to this red folder news. But at the beginning of the week, where I usually do my news outlook, this was not there. President Trump speaks was now on the forecast. And here is 10 a.m. open. You can see that we run higher. And then, you know, usually what happens with 10 a.m. red folder news is that it's a second stage manipulation. It manipulates price once more before really heading in the right direction, even if 9:30 and 8:30 did manipulate price lower. In this case, 8:30 was consolidation candle, but 9:30 did move as below this outside liquidity. And then from there, 10 a.m. brought us towards an inside of the daily consequent encroachment of this wick, the daily wick the day before this. And as I mentioned before, when there's an array and it's still not close to, not close through, what price would usually do is refer to its levels as a resistance or support, and that would give you a bigger idea on how price is going to be using the array. We also have the new day opening gap. Notice price does wick through it, touching within the consequent encroachment of this wick premium. We failed to close beneath this wick premium, consequent encroachment level, and we also failed to close beneath the new day opening gap low. From there, we displace higher, we take out the day's high, we reach a little bit more higher, fall just short of the daily volume imbalance, and then from there we displace lower, touching back into this big BC here, buy side inefficiency, sell side imbalance. Just before we move into 1 minute chart, an extra point that I missed out in the previous slide was that the sell side liquidity was nested above the discount level of the most previous range, or the most recent range, and it would have been the wiser decision to not expect complete rejection of the sell side liquidity before touching within the discount level of this range. Here we are on the 1 minute chart, and if you notice, we have a buy position risk to reward tool drawn out here. And while I was recording the previous segments, I was thinking in my mind that it would be the wisest thing to do to share my loss with you guys, and it will just all in all help people realize that no matter how good or no matter how accurate you think that you are, or how accurate or good you think your technical analysis is more specifically within this subject here, you need to understand that it's not black and white. People went short today, people went long today, people made money doing both things. It's not about being right, it's about seeing what you want to see and acting on it. It's about having your positions lined up with what you know works for you. And something that ICT actually had in his Market Primer series on YouTube is to not live in the black and white. As a trader, you need to understand the gray. You need to know that you're not always going to be right. And he also says that for as long as he has been doing this, he is not right on a daily basis. It's okay to feel bothered by a losing trade. It's not okay to let it define you. Once I was taking this trade, I was really bummed out. I was disappointed seeing it not work, and I ignored the reason why I was taking this trade. Obviously, I had this highlighted out on my Notion book on a page, so I was expecting it. And I feel like I was so caught up in the idea of it delivering like how I expected it to, which was the portion where you see price went beneath that sell side liquidity level, the hourly level, and then created the first position for value gap, and from there we inversed it with one candle. The excitement and the pride that I felt from that happening made me ignore the arrays that we had on a more discounted. And as you can see, as we move on in price, as we mitigate these arrays, you see that it did deliver, and it did hit the minor buy side liquidity that I had highlighted out, which was pre-market equal highs, this high and this high. These are perfectly equal highs. And you see, it does get delivered too. But it was just my entry that was wrong. And you know, there might be another universe, another scenario where this trade would have worked, and I would have been feeling over the world. I would have been extremely happy. I would have been feeling extremely confident. I would go into the next day wanting to trade to feel that dopamine rush again, to feel the pride and to feel the trust in myself, to feel that what I anticipate happens, to trust my understanding of the charts, to trust my analysis. It would have made me feel on top of the world. But I can't say unfortunately, but ultimately what happened was it did not work. And I have to be comfortable with that fact. As a trader, you have to learn to be comfortable understanding that you will not be right at all times. It's way easier said than done. I've heard this so many times from so many different mentors, from so many different traders, but it's so hard to honestly grasp and to fully indulge in the real meaning of it. It's okay to not be right. You need to be comfortable with the fact that you will not be right. And I promise you from right now, you will not be right at all times. And that's something that I'm also trying to learn right now. I'm still at the hardest part of the learning curve for this, especially because I feel like with, and I'm not trying to, what's that saying? Is it pull my own leg or something like that? Anyway, I'm not trying to make myself feel better about myself, but I often feel that my hard time frame analysis and my ideas, the way that they line up and come together and fall together, they often provide me with accurate descriptions of how price is going to deliver in the future. And when I see something happening that aligns with the higher time frame, like the run on this sell side here, and the inversion of this first position for value gap, I get excited. I have high hopes for the trade. I remember going into this trade being like, okay, this is perfect. This is gonna deliver. We will not have any problems. And as soon as price went down here on my stop loss, that bit me. It surprised me, it kind of shocked me. You know, when you expect, for example, like this is just a accurate description of how I felt. You know, when you expect something to happen, for example, you expect a high grade on an exam because you felt like you did so well, and then you get the paper back and it's a fail, and you just feel like something hit you in the heart. That's exactly how I felt taking the loss on this trade because it feels like everything lined up for me. It feels like price fell together and it delivered properly, and the manipulation on up 930 was perfect, and the run beneath the low and the second squeeze manipulation one. As you can see, we have a run lower here, small run higher. Second run lower was second manipulation, which starts the formation of a breaker. All of that kind of fell together for me, and it made me happy. Honestly, the way that I can describe this is that it made me happy. And when I say that it made me happy, it does not mean that I felt a slight touch of dopamine in my system, flood in my system, or that I started smiling or I started laughing hysterically. It was just that I felt proud of myself. I felt that all of my studying and all of my reviews and all of my attention to detail and my previous videos that take me a while are finally paying off, and that my work is going to provide me something that I see as tangible, that I see as valuable, which is delivering to where I hoped it would. And as that didn't happen, it forces me to face the reality. I'm not always going to be right. no matter in what situation in life, no matter with who you think you are interacting with or whatever you think that you did, you need to have the humility to understand that you will not always be right. That's okay. Be comfortable with that fact, especially within trading. If you're always being uncomfortable with the fact that you're wrong sometimes, or if you're always struggling with the idea that what you think is not true, or what you believe is disproven, if you constantly live with that fact, especially in a field with trading, where everything, if you're, I mean, depending on your strategy, if you're a discretionary trader, you need to have the humility to understand that you will not be right. Because if you don't, this will be a hell for you. You will not be able to progress. You will be so stuck up in your old trades, making them define you, and believing that one bad trade makes you a bad trader, when it really doesn't. It honestly doesn't. You must be able to move on from moments of, what's the word? Moments of being let down, moments of disappointment, is what I was trying to say. Anyway, enough talking. Price went beneath mid and open, took the sell side liquidity low, went higher one time, forming a sell side low here. We ran beneath it, took that low, went higher, touched within the first position for value gap after it was formed at around 940, around this candle here. And then as we inverse it, we dig a little bit higher, touch the low of this candle here, and then that's the level that we rejected off, bringing us lower, invalidating the creation of the order block that would have been created with the sweep on this low. From there, we traded lower, accumulated a bunch, went back to the first presentation for value gap. Oh, that's hard to say. First presentation for value gap. And then from there, we slowly moved lower, touched the data consequent approachment to wick lower, touching consequent approachment or midpoint of the new day opening gap. Traded higher very slowly, very staggeringly. That's a word. Someone correct me if staggeringly is not a word. And then we went down one more time, did a consequent approachment wick premium. Traded higher, fell short of the first presented per value gap, touched into this inversion here. Traded lower, back into the opening gap, and then from here, you see that we really started digging it with this big candle that shot through these bissies here. You can see that it did that with the objective of running this low here. That was probably engineered sell side liquidity. Price spent lots of time beneath that low and within the new day opening gap. We stabbed a couple of times into the daily consequent premium, or with the final candle, we traded away from it, back into the opening gap, use the 0.75 level as support, trade higher through the half point, and then slowly trade through this and balance here, and gather up price to where we're back at the first presented for value gap, run through it. Above it, we touch the high right there. See that? That's perfect. Touch the high of it perfectly. Back to midnight open. And then there we finally run the minor buy side liquidity that was formed these highs here. There we trade higher, back lower, and then not sure if you can see it, I'm pretty sure you can. Yes, you can. The consequent encroachment of the balanced price range on the daily level. So moving into the afternoon times, you can see that after we delivered towards the balanced price range, we spent most of the time from at around 11:30 to all the way up until 3:45, or sorry, not 3:45, 3:15, just accumulating within the level of the consequent encroachment of the balanced price range, and just failing to touch the daily volume balance. You see how we just get really close to it and then move away, really close to it and then move away. This is just a accumulation of orders above this high and beneath this low. You can see that during 3:15, the Eastern Time PM sensitive time, this 30-minute window, see that price pushes lower, taking the sell side liquidity at this low here. And then during the last 15 minutes of the final hour, up until 4 p.m., which is around this candle here, you can see that price rushes lower, moves back beneath the minor buy side liquidity, beneath midnight open, and then accumulates until close. So moving on to the following day, this is Friday, May 9. This was the day of my exam. I was not able to view the charts on this day, but just plainly looking at the higher time frame and trying to figure out what the day's good objective was, it's difficult, and I'm going to be honest with you about that. It's normal for me to look at a price chart and be given a limited quantity of data and not be able to know what to do with it. Not every day is like Thursday, where I had a entire move for 9:30 to be outlined, and I did not have a point of manipulation for Friday. I did not really know how to navigate through price. So what I turned to is highlighting a raise, discount, and premium, and understanding what and how would price do if price did reach into these arrays. So as you can see, we have midnight open here. We accumulate at the open, and then during 7 a.m. we have this big candle that kind of spazzes out and creates a big high and then a big low, and then closes near its open, giving us a doji. I don't know if people still use that term anymore, but it's one of the slide terms that I remember from my retail trading days. And what that candle did, it was move into the mean threshold of this order block, and then following the later price action, we move back at it once. Second time, refer to it exactly to the tick, and then from there, we shoot below it, beneath the consequent balance price range, create this imbalance here. We run this low here, and then we close off near midnight open. We wick during the final hour. This is the 3 p.m. to 4 p.m. candle. We move into this imbalance here, mitigate that. And we also touch back into this consequent encroachment of the wick that was discounted and now is turned into a premium wick with the inversion of it. And then we close off at 20,146.5 for the week. Now, I'm not ashamed to share that I did not have a grasp on this day. I did not really understand what it was going to do following the previous day's price action. The way that we fell short of this daily volume imbalance really left me confused. And as we talked about before, I'm not ready to continue a long conversation about this. But it's important to know that it's okay. As a discretionary trader, you're not always going to have the exact thing pinned down about what price is going to be doing or how it's going to be moving on this following day. And you can use these days to just add to your data. You can use this day as a collection of price evidence for what price may be willing to do in the future. And it's okay to not trade on every day. For me, I usually trade 2, maybe 3 times a week, and that's if I'm given the best possible volatility through economic calendar for the week. But on this week, I was not given the best to play with. I was not given, or no, sorry, not play with. I was not given the best to work with the federal funds rate and News Tuesday, and it left me 2 trading days. One day that I missed because of my exam, and the other one where I took a loss because of external and psychological factors that did have an immediate effect on how I was able to perceive price. A quick note that I want to share with you guys is another reason why price displaced this much through this low here was that because the regular trading hours gap was still yet to be filled even through half point. And I'm not a amateur where I don't understand the fact that if price does not mitigate the half point of the RTH gap, it's probably not the best idea to go long. But as we know, and as we talked about, I'm not perfect. You're not perfect. No human on the world is perfect. The only perfect being is God. And we can only hope to achieve a slight amount of perfectness in our life that would help us achieve our dreams and goals. But a thing that I want to continue doing, the thing that I want to start applying, and hopefully you will see throughout my videos what I will be continuing to do, is I want to be able to pay more attention towards the regular trading hours gap. Because sometimes I feel like I forget about it and I leave it out, and it does cause me to leave factors out that would have been able to help me, providing me with more data and to provide me with things that I need to be able to trust, things that I need to be able to say, okay, I trust that it's gonna do this. Let me sit down and let the extraneous valuable variable do what it needs to do, and I will act as best as I can, follow my model, follow my rules, and use my discretion over what I've learned over the past uh, year and a half of how I can function within my discretion. And it's not good to say that I should have waited for the midpoint of the regular trading hours to be mitigated, but it would have been a wiser decision to do so. It's not really worth talking about because I can't go back in time and change what I did, but it's something that I want to continue drawing out on my chart, and I hope that you guys and that I will see throughout my future videos that I will be implementing the RTH gap for price action. So anyway, the Friday anatomy is not clear to me. If there's anything that I've missed, I will gladly take any comments about if I have missed an array or if I have missed a bigger idea following the price data that has been provided on Thursday that would have contributed to the idea of how price moved on Friday. I'll be completely open to it in the comments. Feel free to leave anything you want. I only delete comments that are not questions or not statements. If you leave a comment saying thank you or I appreciate this or good work, I'll most likely delete it because there's just no need to be saying that. Anyway, let's move into the 1 minute chart. Here we are, the 1 minute chart. We have the first presentation for value gap of the morning session of Friday, May 9 drawn out. See that as price opened up within 9:30, we got this move that went back into the mean threshold of the order block that we had drawn on earlier, dropped lower, inverse the first presentation for value gap, went back into it, deliver towards the sell side low, run higher, touch back into the subconsequent portion of the balanced price range, and then form this low, which is the low that was used on the 1 hour chart to be the high of the hourly fair value gap. From there, we trade away from there, level, back to the first presented fair value gap, fail to reach to the mean threshold level, the order block, wick down, fill the first presentation fair value gap perfectly. This is just nice to see. It's not really significant, it doesn't tell me anything more about price, but it's just nice to see how the algorithmic signatures play out within the intraday price levels. From there, we run lower, fail to dig through the CE level of the balanced price range. We run back higher, touch the first planetary value gap, consequent encroachment right to the tick. That's just perfect. Again, doesn't tell me much. It's just nice to see the signatures. And there we run lower, push through this array that we were holding as support previously, and then start to use it as resistance once, twice. Run lower. You will start to use, start to form the imbalance that we have drawn on the higher time frame from this low to this high. That's the imbalance that we have there. Now, Following that, we had this big push lower that reached back into the first presented fair value gap of the Thursday that we were just talking about, 5/8/2025. We also had major sell-side liquidity levels within this low that were formed during the Thursday pre-market time. So price referring back to those levels and running them and forming its low of day at this low here was it was nice to see that it was within the objective of running sell-side levels. From there, we after we ran out low, accumulated, formed the low of the fair value gap, back into the gap, the first percent fair value gap, higher, back into it, accumulation at this level here. See low resistance liquidity. This is very smooth edges. That gives us jagged price action where we quickly displace lower and run that sell side liquidity at these lows here. From there, we return lower, back beneath the first position fair value gap, back into the first position fair value gap. Notice how it respects the high. Cross like one encouragement level, cross like one encouragement level, drop lower, above the first fair value gap, back beneath it, push back into the CE again, run lower again, and on the next slide, I'm going to be showing the sell-side liquidity levels that we took within the run lower here. Here they are, this level here, and these, this low here. And from there, we accumulated during the 1:30 to 2 p.m. with just the movement higher here that brought us above the first presented fair value gap. From there, we use the final hour to finally move into the imbalance. Just wick it really quickly with 3 candles trading inside of it, or sorry, 4 candles trading inside of it. Touch them and then open, trade lower and close off, ending the week at 20,146.5. Thank you all for watching. I know this was a longer video than I usually do within the series. It was just that this is just 2 days in a row, and it would be the combined length of 2 days. Thursday was a bit of a roller coaster. We had lots of things to go over, but during Friday, which was expected because Monday, following week, there's going to be Red Folder News on Monday, ISM 10 a.m. Red Folder News. So Friday probably slowed down and just accumulated in preparation for the Monday, which is the day after Friday, obviously, of the trading week, for it to have the volatility injection that we did not have during this Friday. Anyway, I hope you enjoyed this video, and I hope you all learned something. If you guys would like to see something that you recommend me to do, or you enjoy me doing, I don't do enough of, please let me know. I will do my best to provide that for you. And as always, Lord willing, be safe.